Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the US dollar index on Friday plummeted after the US employment data for August came in below expectations. The non-farm payrolls rose by a seasonally adjusted 156,000 in August, from the prior month forecast of 180,000. The employment rate rose to 4.4 from 4.3, though the level still remains to an historic low. The US dollar also hit bumpy data after last Thursday's weaker than expected inflation report. This keeps pressure on the probabilities that the Federal Reserve will be unable to keep to the third rate rise this year. So the US dollar did plummet to a low of 92.09. Now, the index measures the greenback strength against a trade-weighted basket of 6 major currencies, with the euro weighted at 57.6. Last week, the US dollar came under extreme pressure after challenging the crucial support level that I highlighted at 91.70. And from the rebound of the low of 91.60, the market still questions whether we can get a potential recovery. Looking at the Australian dollar, the market is still attempting to restore its bullish bias, even though it keeps failing towards the 80-cent mark. I still feel into this week that the market will still remain capped from this region, and any attempts towards 79.85.95 should draw a bearish defense, and potentially could set up a bull trap. Now, the definition of a bull trap is a situation where the market traders enter a long position near the top of an upcycle trend. And as you can see here, I view 79.85 to 95 as that level. Therefore, we could see the market retreat and look back towards 79.15 as the immediate target. This week, we do have a lot of data impact for the Australian dollar, starting with tomorrow with the RBA monetary policy meeting, with the RBA rate statement to follow. Along that, we have the GDP quarter for this year. And also we have the retail sales trade balance, and alongside that we have the RBA Governor Phil Lowe to speak twice, starting on Tuesday and then on Friday. If the negative implications hold for the technical outlook here, then I do expect to see the market not go to 79.15 but to a target of 78.50 and reassess from there. The euro staged an explosive rally on Friday after the non-farm payrolls missed the forecast of 180,000. However, from the challenge, if we have a look on an hourly, you can see the market plummeted very aggressively from that high of 119.70.75 and hasn't been able to stage a recovery since. With the shooting star in place, as well as this rejection from the level of 119.70.75, I'm now looking to a target of 117.90, with this uptrend coming in at 116.80.90 and reassess from there. The immediate resistance on the day comes in at 119.25. Well, the dollar-yen gapped open to the downside this morning behind the news that North Korea has exploded a hydrogen bomb on Sunday. This prompted earthquakes, which measured between 6.3 and also 4.6. In return, the US President Donald Trump labeling the move as hostile and dangerous, and his defense secretary warning any threat to the US will be met with a massive military response. Therefore, the dollar yen will likely be on its toes for the start of today, with immediate support coming in at 109.30. It is still viewed, though, from a strategy point that the market will still hold above that level of 108.30.35 after last week's rejection. The technical implications are still slightly on the bullish case, but from this morning's gap open has weakened the RSI, so we could see the immediate target challenge of 109.30 and reassess from there. The Great British Pound isn't going anywhere at the moment. As you can see, the market still trades in a sideways band and locked in the parameters of 128.80 to 129.85.95. It is viewed, though, that the market will probably fail towards this topside challenge, and any weakness would need a break of 128.80 to expose the target of 127 and reassess from there. With the wake of the hydrogen bomb test from Pyongyang over the weekend, provided upward momentum for gold and now looks closer to the objective of 1,340. Above there is uncertain from any target, so I don't have a view above there until we reach a target around 1,360. So it's a 20-point gap. Beauty for the fact is that with the tension increasing with the US and North Korea, could actually drive the gold through 40 and up towards 60. Technically though, we are overbought, as you can see here from the RSI, so we could see a pullback which can be as deep as 1,326, with the uptrend holding at 1,304.26 now. The break above $17.70 gives a touchdown for the silver, now exposes the next target of $18, figure 10. That being said, we are overbought, and I am a little bit cautious to the bull side, purely for the fact is that the technicals are overbought, although the ADX is trending. So this could actually see further bullish moves. And with the uptrend now seen at $17.45, if challenged, it would need to break beneath there to get an exposure down towards 1680. But with the geopolitical tension in overseas, could actually see a drive to the upside for silver as well as gold. And to wrap up with oil, the market still looks to a challenge to that level of $48.45 and reassess from there, as a break would give further scope to a $50 target. Any pullback should find support now at $46.45.60. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful start to the new week.